Hey, everybody. Big news this week. We are almost oversold. You're looking here at my favorite technical indicator, the percentage of stocks trading above their 50-day moving averages, what I like to call AT50 for above the 50-day moving average. This is using TradingView. You can see I've marked off my oversold line, which is the 20%, the 20% level. We are now at 22%. Technically, we're oversold when we go below that. We're essentially there. So I'm going to think in terms of oversold conditions. So this means I am going to be looking for buying opportunities. I'm going to be looking to close out put positions, most put positions, most shorts. That's generally the rule that I follow. What I wanted to spend some time today is how I use Swing Trade Bot to look for some potential candidates in case the market does rally next week ahead of or instead of going officially oversold. So one of the things I want to do then is look for stocks who held 50-day moving average support, assuming that those will be the strongest stocks left in the market. Because when we are at 22% of stocks trading above the 50-day moving averages, it means that the vast majority of stocks have broken down, are in bearish territory, and looking weak, precarious, all the things we don't like when we want to buy a stock for a trade. So I'm going to use Swing Trade Bot. And let me start off at the homepage. Again, as a reminder, I'm a subscriber. So some of the things I do here may not be available to you in the free version. So I'm going to go to end of day scans. And let's just go ahead and select all scans. And as a reminder, again, I'm only going to look at the filter total. I'll hover over this tooltip here to show that this filter total only gives me stocks that meet a minimum volume threshold, and it excludes ETFs, particularly important because I really want to look for stocks. And as I scroll down here, I'm going to look for stocks that held their 50-day moving average support. And of course, I zipped right by it. Let me go back up. There we go. And as you can see, only 24 stocks held that line. So that gives me a nice tight universe to look at. So I'm going to click on 24. I'm going to further filter out stocks that are below $10 in price. Click on as charts because I like to view this. I like to look at this in visual form, and I can quickly exclude stocks that aren't of interest. So, this stock here, HRMY, too much chop. This one is actually, the volume is a little too low and too inconsistent. Jacobs Engineering does look interesting, so I put that on the watch list. I'm just going to skip over the adding to the watch list part just for time purposes. I'm skipping SLG because it's in realty. I'm trying to avoid REITs and real estate related stocks in this high interest rate environment. FedEx is an interesting one. This move here was after earnings. So although the market was very weak on Thursday, FedEx managed to clear the 50-day moving average after earnings. And I actually made a bearish bet ahead of earnings with what I thought was a 50-50 play, pairing this put spread with a put spread on Darden Restaurants. So Darden Restaurants did indeed go down, but it didn't go down as much as FedEx went up. So what I did in response to this is when the 50-day moving average held, I went ahead and put on a new trade, which is just a simple calendar call spread. I think it was at the 265 strike, if I remember correctly. And then I'm just assuming that the put spread on FedEx is pretty much toast. So FedEx actually looks good, with the huge caveat that it did fade from the highs, which happened to look, it matched right at these previous highs. So that means that maybe buyers aren't so interested in FedEx as it seems. So let's see what happens. But anyway, as I mentioned, FedEx is interesting because if the market does go ahead and rally without going into official oversold conditions, FedEx should be one of those stocks that continues to move higher as having proven itself strong post earnings. Trinity Industries is coming up from below. That's not what I'm looking for. I'm looking for stocks that are coming down and holding support. So that one's off the list. If the market were looking better, Kraft might actually be interesting to me because I might be expecting more of a breakout back to maybe 36. But I'm a little wary of the stock market overall, so I'm not going to bother. There's not a lot of upside here anyway. On assignment looks kind of interesting, but this is just a lot of chop. So there's probably not a lot of upside in the short term there. Trade Web, this one looks kind of precarious. I could go on a list, but I think this upside is pretty much limited by 2 points to 84. So I'm not going to bother. This stock GKOS, a lot of churn, is just following along the 50-day moving average. Probably not a lot of potential. Short term, GLNG is, I believe, a natural gas exporter. If you're into energy, this could be interesting, but again, notice there's only really 1 point of decent upside potential in the short term. DLR, this is a REIT. I'm not going to bother with it in this high interest rate environment. HAE, Haemonetics, I think that's how you pronounce it. Just a lot of chop, not going on my list. AEM, this is gold miner. I'm not going to mess with it right now. I'm going to do another post on gold later. Healthcare facilities, this looks like a REIT, so forget it. That's AGL. Target Hospitality Corp. I don't know this one, but this could be interesting, but you can see it's got a tight range going on, so maybe it's good for a range trade. I'm not going to put it on my list. Sterling Check Corp. This, again, this is in a tight range. I don't see much opportunity here. And then NMIH, just a lot of churn going into this point, not a lot of potential upside. This one looks interesting, except for it's a REIT. Otherwise, I would put this on the list. This looks actually very, very interesting. I mean, look at how well the 50-day moving average held on the last trip, and it even held pretty well here. Rhythm Pharmaceuticals, I'm definitely skipping over that. Biotech company, anything can happen at any time. Let's look at the second page of options. Lazy Boy, no, I don't want anything related to homes right now. WPM, precious metals, no, I'm skipping precious metals, silver, gold included. Energy Corp, nope. Sterling Construction Company, even though homes and construction took a really big hit last week, this actually did okay, all things considered. I suspect it's at huge risk to further break down, but I'm going to put it on my list in case it does rebound from this nice support level. The danger here is that sterling has not proven itself for a very long time on the 50-day moving average. So I can't be confident at all that this first test is going to work. And finally, we have this stock, Champion X Corporation. This actually looks interesting to hold the 50-day moving average. I'm going to take a look. If you're into energy, this is worth a look. I'm not going to bother with energy companies. Now, earlier in the day, I did do an intraday look. So I want to take you through three other stocks that hit the list. And let's see what happened at the close of trading. So first is Celsius. And unfortunately, it did not hold the 50-day moving average support. I was hoping that maybe it would close right on the line and just barely qualify. Now, instead, with this breakdown, it actually looks kind of bearish. It surged 20% post earnings. So this is a lot of profits that people might be itching to take. They've already taken all the incremental profits from the rally following that first day. Excuse me. So I think Celsius is kind of dangerous, and you could see this steep rise was just begging to be corrected. Another one I saw was Ramp. I actually bought one call option on this one just to speculate that it could hold on for dear life. You can see it kind of slipped below 50-day moving average, so my trade is looking kind of tenuous. I'm going to need a big save next week with the market rebounding. But otherwise, this is in danger of coming back down at least to this previous low. So Ramp did not quite hold intraday. And then the last one is Braze. And I actually bought shares on this one because I want to be able to sit through a little bit of volatility. You can see on earnings, it did go up 3%. And then after one more day of gains, sellers took over. I'm hoping that the profit takers have taken what they want to take out of this stock. And I really like the fact that on a weak market day yesterday, Braze or BRZE held on to its 50-day moving average support and managed to rally at least for a little bit, and then close flat on the day. So we'll see what happens. Like I said, I bought shares. I'm hoping to hold on to a little bit of shake and bake action, maybe around the 50-day moving average support. So we'll see what happens. There are no guarantees, of course, with any of this stuff. This is all just trying to put the odds in our favor, but we don't know what will actually, what the future holds. So we'll just see. So again, just as a quick reminder, we are almost officially oversold. Technically, officially, I'm going to treat this as close enough to oversold, and I'm looking for buying opportunities. This is also a time to start considering closing out shorts, taking profits on put options, and even if the market continues to sell off, just start making a shopping list. If you want to know more about the trading rules for oversold conditions and overbought, but we're not going to be overbought for some time now, you can go to my blog at drduru.com/122, and I describe all my rules for market breadth trading right here. And you can see it's called How to Trade Extremes in Market Breadth. And actually, while I'm here, while I'm talking about the trading rules, let's take a quick look at the indices. So for instance, the S&P 500 looks precarious, right? It is now testing this pre-Jackson Hole high that I've kept my eye on. It didn't quite test it at the August lows, but it's essentially testing it now. If it breaks through this key support level, then I'm going to expect the S&P 500 to continue on down to the 200-day moving average support, which is this blue line, which just so happens to be converging with the beginning of what I call the summer of loving stocks. It would just be poetic if these 3 months, August, September, and October, which are the market's most dangerous in terms of drawdown potential, end up wiping out all of the gains that the summer delivered. So it looks like that what could be in store. I'm, again, hoping that oversold conditions hold up and we at least get a rally next week to take some quick swing trade profits. And one thing else I wanted to note is that remember, given that August, September, and October are the market's most dangerous months from a drawdown basis, this sell-off here, which actually started right at the beginning of the month, should not be a surprise. And I wrote a post about this. The easiest way is to go back to my blog and do a search for most dangerous months, and the article should come up. So thank you for watching. Check you out the next time. I'm going to be writing this weekend a little bit more detail on my observations, and just be careful out there, everybody, and check you out the next time. Take it easy.